Study Spend budgeting app for students. Where we started, our original concept was a simple student-friendly budgeting app aimed at people 18 to 24. The focus was always on weekly budgeting rather than monthly because that's how most students actually think about their money. We included money pots to help organize spending, kept the visuals light and modern to reduce stress, and used a more humorous tone in reminders to keep the experience engaging. The initial goal was straightforward. We wanted budgeting to feel approachable, quick, and easy for students who already have a lot going on. Students often struggle to manage money week to week, so we wanted a solution that felt supportive rather than stressful. The starting point gave us a clear foundation, but it was still quite broad. It helped us understand the direction we wanted to go in, but it also showed us where we needed more depth, more evidence, and a more realistic business outlook. That's what led to the developments we'll talk about next. How the idea has developed. Since presentation one, our idea has moved from a simple budgeting concept into something much more grounded and realistic. One of the biggest changes we have made was sharpening the problem itself. At first, we were working with a broad assumption that students struggle with budgeting. Once we properly analysed more specific student finance data, we started to see clear patterns such as overspending early in term when student finance first comes in, or when they get their monthly allowance, which is why we are focused on weekly budgeting. We also see how low weekly budgeting habits and unexpected costs completely throwing people off track. That helped us define a much more precise problem to solve. From there, we adjusted the weekly budgeting flow. We gathered that students want something quick, not another task on their to-do list. So we simplified the steps, made the process smoother and the process a lot easier to follow week to week. We also strengthened Money Pots feature, the data that students tend to spend in predictable categories like food, transport, and nights out. So we shape the pots around real spending habits rather than generic labels. That makes the feature more intuitive and more likely to be used consistently. Another change was adjusting the tone of reminders. Students don't want budgeting apps that feel judgmental or naggy, so we shifted the tone to be more supportive and lighthearted, which aligns with how students actually want to be spoken to about money. And finally, we've started developing a realistic business model. This is a key step forward from presentation one. We're now thinking about how the app could sustain itself financially, whether that's through 3-entry model with optionally paid features or partnerships with student unions. This shift shows we're not just designing an app, but we're building a practical product with a clear value proposition and a path to funding and growth. Overall, these changes show real progression. They're driven by data, shaped by feedback, and grounded in the practical realities of launching a digital product for students.
What students struggle with when spending. Impulse purchases are one of the most common spending habits among students. Purchases are usually made quickly without planning and without comparing different options. Students are especially prone to this due to online convenience of shopping. Emotional triggers are also a major factor in impulse purchases, with many students rewarding themselves in response to stress or boredom. Underestimating small purchases, many students believe that everyday expenses won't make a difference on their own. Things such as coffee, takeaways, transport, or subscriptions may seem insignificant on their own, but add up over time. The frequency of these purchases can also be ignored. Students consider the cost itself. However, with repetition of getting a £4 coffee every day can easily add up to £80 a month. Students often struggle with social pressure, wanting to fit in with their friends and not missing out, rather than considering what they need. The desire to stay included with nights out, shopping, holidays often warps their thinking, even though they are aware of their budgets. According to our survey, students spend an average of £60 on a night out, with most students saying they go out at least once a week. That's £240 a month. Another common spending issue is that money is often spent on non-essential lifestyle purchases before basic needs are fully met. Young adults tend to prioritize short-term wants, such as impulse buys, small and frequent purchases, especially when income feels flexible due to student loans and part-time wages. When students receive their loan, a large portion is often spent within the first few weeks. Survey data shows that all students who responded ran out of money before their next loan payment. These spending patterns can lead to financial difficulties, including reliance on overdrafts or borrowing to cover essential living costs. Competitor landscape. Similar to our app, Monzo and Starling Bank send instant notifications every time you make purchases, including where you made it, how much you spent, and the remaining balance. Monzo has a round-up feature that rounds up to the nearest pound every time you spend, and the difference is transferred to savings. For example, if you spend £1.50, 50p will be put into a savings account. Starling Bank has better overdraft terms with higher limits and better interest rates. The main benefits of Monzo and Starling Bank is that there are no spending fees when abroad. You can use your bank worldwide with no transaction fees, whether with your card or an ATM. Even though both banks are very functional, their user experience feels similar to most traditional banking apps, clean and professional, but not particularly engaging or memorable. Our app aims to differentiate themselves by creating a more interactive and enjoyable user experience that keeps users actively involved in managing their finances. A key point of difference will be our savings pot feature. By incorporating strong visual elements and progress tracking, saving money becomes more tangible and rewarding. This visual approach is especially effective for students and young adults, helping to build consistent saving habits through engagement and motivation.
So, to understand the commercial potential of this idea, we sized the market using SAM, and SOM approach. Our total addressable market is all UK students aged 18 to 24 who manage their own finances. This is a large and consistent group every year, and it gives us a clear sense of the overall opportunity. From there, we narrowed it down to our serviceable available market. Students who either already budget or want to improve their budgeting habits. This group is defined by behaviours we saw in our data: overspending early in the term, inconsistent weekly tracking, and low visibility of where money is going. These are the students who feel the pain points most strongly and are actively looking for support. Finally, our serviceable obtainable market focuses on the students we can realistically reach in early stages. That includes university partnerships, student unions, campus ambassadors, and organic social channels. These are spaces where students already engage with their financial support and student-focused tools, so the barrier to adoption is much lower. This breakdown helps us understand not just the size of the opportunity, but the path to reaching it. It also ensures that our product decisions, our business model, and our growth strategy are grounded in realistic understanding of who we're building for and how we can reach them. One of the biggest developments since our first presentation has been shaping a more coherent business model. In presentation one, we focused heavily on the concept, but we didn't fully explain how the app would sustain itself financially. This time, we've built a model that aligns with both student behavior and the scale of opportunity we identified. We're using a free entry model where the core budgeting features remain completely free. This is important because students are price sensitive, and lowering the barrier to adoption increases the likelihood of consistent use. From there, we introduce optional paid upgrades, things like advanced analytics, custom themes, enhanced saving tools, and priority support. These aren't essential to the core experience, but they add value for users who want more depth. We also identified partnership opportunities with student unions, universities, and brands that already target students. These partnerships could support the app financially while also giving students access to relevant discounts or resources. This model works because it's realistic for our audience. It keeps the app accessible, creates sustainable revenue streams, and supports long-term growth without compromising the student-first approach. It also shows that we're not just designing a product, we're thinking about how it operates as a viable business.
The main goal of our app is to help people actually reach the things they want to save for. Instead of just tracking money, users can set up multiple saving goals, making saving feel more personal and connected to real plans, not just numbers on a screen. We focused on making the experience modern and enjoyable, especially for a younger audience, so saving feels achievable, engaging, and satisfying. Another key feature is the monthly spending breakdown, which is fully customizable. Users can choose how their spending is grouped, like food and drink, online shopping, leisure, or transport. The app also highlights spending habits over time, such as showing when someone has spent more or less than the previous month. These small insights help users understand where their money is going without having to dig through transactions themselves. The overall design uses a pink and blue color palette to create a relaxed, approachable feel. Unlike traditional banking apps that feel quite serious, we want something lighter and more modern. Simplicity is a big focus too. Everything is clear, easy to read, and easy to navigate. We've added interactive elements like progress animations and small celebration moments when a goal is reached to make the experience more rewarding. Overall, the design aims to remove the stress that often comes with banking apps and replace it with something more positive and motivating. When we tested our MVP with peers, the feedback was mainly positive. Most commented on the app's aesthetic and color palette, saying it looked modern, clean, and far more appealing than the banking apps they currently use. Several people even said that the visual design alone would make them more likely to use our app. We did receive one constructive critique about the color palette. While most people liked the aesthetic, a few mentioned that pink and blue tones felt slightly too feminine. However, this is something we can easily refine. A key feature that stood out was the monthly spending breakdown. Users said that seeing their spending presented visually rather than just numbers would genuinely help them prioritize their finances and better understand their spending habits. Another feature that received strong feedback was the saving model. The idea of celebrating saving goals with visuals like confetti made the experience feel more rewarding and motivating. Many users said this would encourage them to save more consistently. Thank you for listening.